Hello and welcome. Gold is on fire of late, so much so that it crossed the psychologically important rupees 50,000 mark in domestic market for the first time on Wednesday. The question is, how far can it go? Is safe haven demand alone driving the prices higher? What about silver? Will the white metal take off now and outshine gold? We caught up with Navneet Damani, Vice President and Head of Research for Commodities and Currencies at Motilal Oswal, to seek answers to these questions.
Well, hi, good evening. We've seen a lot of buying coming into gold over the last couple of years, and it's given close to 25% returns in this year and roughly around 45% returns cumulatively over the last 2 years. So, just to conclude that this kind of return, just by purely a safe haven buying, does not goes very well. It is predominantly on the back of the COVID-related crisis which started, and pretty much it started from the trade war between US and China in 2018. And since then, gold has been getting support on lower GDP growth rates, falling PMI numbers, and weaker economic data which is coming from around the globe. In the last 6 months, 7 months, the rally which we have been watching is predominantly on the back of slowdown that we are talking about because of the COVID-related crisis. A lot of it has got to do with central banks trimming their interest rate down to zero levels, or even in below zero level in certain cases. So it's a combination of a lot of factors with negative interest rates on bond, lower interest rates, liquidity being pushed into the system by global central bank to pent up demand, to absorb the shocker related because of the COVID crisis, and expansion of central bank's balance sheet, which in a long run would start to end up into higher inflation and will be positive for gold prices. So I believe that these all factors in combination are what are driving gold prices at the moment. It's not just safe haven appeal which is just pushing the metal upward. Well, we as Indians are price takers of gold. Internationally, whatever the prices are on the Indian factors, because of the rupee, it comes into our domestic prices. Plus, the prices here are little higher because of the depreciating rupee, which we've seen that in the last 1 year we have depreciated by about 6-7% on the rupee front, and a 2.5% import duty hike, which is currently standing at 12.5%. So, in that perspective, we are roughly around 35-40% expensive than the world from a 5 year perspective as far as gold goes. Internationally, $1,920 was the highest peak price for gold hit in 2012. But even now, we haven't hit that prices. But here, the domestic prices have almost doubled to what the prices were. Of course, the demand is likely to be hit, but jewelry demand is not what is driving gold prices at the moment. It's more of ETF demand, more of digital gold demand, more of bars and coins demand, which is going on in the market. So people sitting at home want to participate in this rally, though they are enrolling themselves through ETF, through buying exchange traded products, and also venturing into digital gold at this point. So of course, jewelry demand has taken a hit, and in the next 3-6 months also we expect that jewelry demand could be subdued, but prices are likely to stay where they are, or probably inch even higher. Well, silver has been a big laggard as compared to most of the other asset classes. In the last 5 years, silver has been hovering between 35,000 on the domestic front and between 50-51,000 on the domestic front. And it is now that silver has moved out above 51,000 and has sparked to about 60,000 in a very short span. Silver in the last 5-7 years has moved from being a precious metal and has transformed itself into an industrial metals. So most of the time you see silver hovering or probably moving in line with how other base metals are faring, like how copper or zinc is faring. Currently, we are seeing a sustained up move in most of the industrial metals, and that is what is pushing up demand for silver as well. Of course, there is a lot of mine which have gone off stream in the last few months because of the COVID-related crisis. Plus, demand has seen very significant improvement. Also, ETF holding for silver is at record high levels. So there is a lot of buying interest from retail as well as institutional investors for silver at this point, and that is what is pushing silver prices of where they are. Technically, also silver has given a clear breakout and is looking for a upper band of the range. I'll not be surprised if we see silver at lifetime high on the domestic front by the end of this year, and we continue to expect that silver in the next 3 6 months could deliver say about 15 to 20% returns from here, also taking the prices to 74 75,000 levels on the Well, it's about what the time frame is that we are looking at. From a 2 year perspective, I am bullish on gold, and I expect that gold could give you handsome returns, say maybe about 18 to 24% returns from here also. But if you talk about short term, maybe in the next 3 6 months, silver is likely to inch up quicker and faster. Silver generally is has a tendency to move 15 20% upward or downward in a matter of short span, and then it goes into a broad consolidation. However, gold is unlike that metal, and gold generally has a 2 3%, 3%, 4% returns every year and every month, and it goes to give you a sustained return. So both these metals have different tendency. From a 2 years perspective, I am bullish on gold, but from a 3 6 month perspective, I expect silver to outperform. Well, our 18 to 24 month perspective target for gold is around $2,400 on the international front and around $67,000 on the domestic front. We believe the kind of momentum we are seeing or kind of money flow we are seeing from most of the central banks like ECB doing a $750 billion stimulus a couple of days back, and expectation of a $1 trillion stimulus from US anytime soon is likely to push up demand not only for precious metal but for other risky assets also. But sooner or later, these risky assets will find their own space, and they will stop to the money supply into these assets will start to fade off, and people will start to return parking money into safe haven. And that is when we see that gold will have major thrust coming into on the upside. Also, the growth, global growth that we talk about. We do not expect that in the next couple of quarters we are likely to see any strong revival in growth. Whatever we are seeing is kind of liquidity push and kind of knee jerk bounce back into economies which have gone or which are nosedived because of the COVID related crisis. So once things start to become a little stable, once stability comes in, then safe haven appeal will uh, attract gold once again, and investor will start to move out from risky assets towards precious metals, and that is where the next thrust or next bullish bias for gold could come in. So from a 18 24 months perspective, we remain strongly bullish on gold, targeting say about 25 30% upside from here. Also on the domestic front, 67,000 could be our target, and on the international front, dollar 2400 could be our target.
Thank you, sir, for your time and insights. Well, that's it from our side in this video, but keep checking out this space for more such interesting content. Goodbye.